Hi, and welcome to one of, I guess, our last recordings for the summer of 2020 for Accounting 4200, Government and Not-for-Profit Accounting. In this presentation, what I'd like to address is the issue of terminology as it relates to journal entries and the financial statements. One of the students had a really good question. They were asking about the comparison between the terms that they used in journal entries in intermediate accounting versus maybe what they're seeing in governmental accounting. And there's a lot of similarities, but there are a few differences, and so I think I'd like to talk to those for a few minutes. First, I have a diagram that comes from another textbook that we did not use. It's also from McGraw-Hill. It is Rec and Lowenshone. A very good textbook, very in-depth coverage. As you can see, we have the formula assets equals liabilities plus fund balance. Again, fund balance is the term that we've learned in government accounting. Instead of calling it equity, we call it fund balance. Excuse me. So for assets, typical asset accounts that you would see are very familiar to us. Cash, receivables, investments, prepaid items, and inventory. Those are all items we would typically see on financial statements. Now, on the government-wide statements, and we'll take a look at an example, of course, at the government-wide level, you're going to see both current assets and non-current assets. Over on the liability side, where we see accounts payable and accrued liabilities, those are current liabilities. That's all you're going to see at the fund level. But at the government-wide level, you're going to see both the current and the long-term liabilities. And again, I'll show you an example of that. And the difference you'll see is down in the portion where normally you would be used to seeing equity, where you have retained earnings and your common stock and so forth. Here, what you're going to see is a division of the fund balance. You're going to see how the fund balance is set up. So that portion of it that's non-spendable. Invested in capital assets, tied up in prepaids, things that, you can't spend a prepaid. You can't spend inventory. It's just not in a spendable format, and so that's why we call it non-spendable. If it's restricted, again, just as a reminder, restricted just means that it's restricted by the Constitution or the charter of the government or by an outside party. Whoever provided the money placed a restriction on it, and so that restriction has to be observed. If it's committed, that means it was committed by the highest decision-making level within government. So in the United States, at the federal level, it would be Congress. At the county level, it would be the county commission. And at the city level, it's generally the city council. Assignment, so if we have assigned, that means that there's been a positive intent to use the funds for a specific purpose. And it can be documented in meetings, minutes, a memo, something, something that would document the expression of intent. It doesn't have the same force of law that the committed or the restricted have. And then anything else becomes unassigned. And so that's what you'll see is the division. So that's the difference between, say, what you're typically going to see in a private accounting set of financial statements versus what you're going to see in a government set of financial statements. Under the operating statement accounts, we're going to see our traditional revenues, expenditures at the fund levels for the government funds. We're going to see expenditures. If we're dealing with non-governmental funds, or we're dealing at the government-wide level, rather than expenditures, we're going to see expenses. And again, I previously discussed what the difference between an expenditure and expenses. And then you're also going to see something called other financing sources and other financing uses. And those are classifications for things that, hey, it's a source of funding for us, but it doesn't meet the definition of a revenue. Just like other financing uses, it doesn't meet the definition of an expenditure, but it is a use. And so we call it other financing uses. And so you'll see this also when you're dealing with deferred outflows and deferred inflows. That's another set of terminology that I do address somewhere else. but it's new terminology in the sense that you didn't see that over in the private sector side. And then, of course, because governments adopt budgets and they become legal instruments, we have to deal with the budgetary accounts. And so with the budgetary accounts, we have our estimated revenues, our appropriations, estimated other financing sources, estimated other financing uses, encumbrances, and encumbrances outstanding. So those are going to be the typical type of accounts. So when you're doing journal entries at the government-wide level, they'll look pretty normal in terms of what you were used to seeing in Intermediate Accounting 1 and Intermediate Accounting 2. They look kind of normal for you. But when you get into the fund level, that's where it can get a little foggy for you. And I don't blame you for that. First of all, these kind of questions of terminology, they relate to the chart of accounts, or questions about the chart of accounts. And so first, just kind of review, when you're dealing with expenditures, you're kind of dealing with a four-step process in an expenditure. So the first step would be the appropriation. That's where the legislative body gives permission to spend money on something, whatever it happens to be. And then when the government itself, after it receives permission by the appropriation, it then places an order for something. That order, they can create what they call the encumbrance. And so that prevents or helps mitigate the risk that they are going to overspend a particular category because the invoice hasn't been received, the goods or services haven't been received or provided, and so they haven't booked the actual liability yet. Next comes from encumbrance, we move to expenditure. At the point where we record an expenditure, that's the point where we now have an invoice, and so we book an expenditure and a payable. Okay, and so now we've got something on the books. We close out the encumbrance and we recognize the expenditure and the liability at that point. And then, of course, there's the disbursement where we settle the liability, and then we have a cash payment that goes out to somebody. Right, so that's kind of the way the process flows in the expenditure side. On the revenue side, it doesn't change much. You still have appropriation. Rather than appropriations, what you have there is you've got your estimated revenues. And again, they're estimates. Billings for property taxes and so forth. So that's a big source of funding at the local government level. And so they'll go ahead and send out the property tax bills. And then those become kind of your receivables, and they'll have an allowance for what they think is going to be uncollectible. And so the process just works very similar to what you saw in Intermediate Accounting 1. All right. Now, in terms of chart of accounts, the chart of accounts is basically the list of all the accounting classifications that you're going to use in your journal entries. That's part of the accounting information system. So for those of you that have taken Accounting 3600, which is our Accounting Information Systems course, I spend time talking about the chart of accounts. And in government at the fund level, typically the chart of accounts includes segments. So you can take an account number and break it down into segments. And so an example would be the first segment might be a three-digit identifier for the fund. So is it the general fund? Is it a special revenue fund? There'll be an identifier, a number that will identify which fund it is. The second part, you'll have kind of an organizational component to the account number. So you may be looking at department, division within a department, whatever it is. So agencies are typically broken down into organizational units, down all the way down into departments and sections. And so you could set up an account structure that would identify each one of those levels. And so that might be the second segment. The third segment might represent the activity. So what kind of activity are we talking about here? The fourth segment might deal with broad objects like expenditure categories, personal services, supplies and materials, debt service, interest. And then you can have a fifth level which provides even more detail. So if we have some expenditure that is related to services, it might go into salaries and wages. for permanent positions, right? Or salaries and wages for temporary positions, or salaries and wages overtime. And so you can kind of see where you can build this chart of accounts and start from a very broad, hey, this is coming from our general fund, all the way down to these are the salaries and wages that we paid to our temporary help. And that's all built into a single string of numbers that is represented as your kind of your classification, your chart of accounts. So, but it gets complicated. But again, if you took systems, you kind of understand why they have to do this, because this is how they link the information together so that we can get meaningful reports out of it. And so we link this information together using these different segment approaches. Now, what I would like to do is move from this presentation here to, I'm going to move to the financial statements for the city of Dalton. And so I go to their 2018 statement of net position. Again, the statement of net position is the equivalent of the balance sheet. This is at the government-wide level. And so when you're talking about, well, what kind of things do you see? Well, if you look over here for current assets, I told you you're going to see both current and non-current assets. It's going to look very similar to what you may have been used to seeing when you were dealing with private company financial statements. We've got our cash and cash equivalents, we've got investments, we've got restricted customer deposit funds that have been given to us, we've got our receivables, and then we can classify the receivables by their type, and then we have unbilled revenues. Okay, so that's probably a little new to you, but again, once you learn the mechanics of how a government operates, you begin to understand what these specific terms mean. Fuel stocks, so that'd be fuel that they keep. Cities often have their own gas station, and so they police cars, fire trucks, public works vehicles will all go to kind of the city gas station and get gas. And then they have their deposits and prepaid items. So those are all your current assets. Your non-current assets are your non-depreciable capital assets, your depreciable capital assets. Here they have nuclear fuel at amortized cost, okay, if there's a nuclear power plant. Restricted customer deposits, renewals and extensions, nuclear decommissioning. So these are all the non-current assets. Capital leases, investments in joint ventures. So not too dissimilar. I remember I told you about the deferred outflows of resources. Okay, again, I'm not going to deal with that right now because it's kind of a rabbit hole. I dealt with it previously, and I won't deal with it now. But again, it's not an asset, but it's reported with assets because that is the behavior of it. It behaves like an asset, but it isn't an asset. And come over to the liability side, and again, it looks very similar to what you traditionally have seen in private sector accounting. You've got accounts payable and accrued expenses, accrued interest payable, claims payable, unearned revenue, compensated absences payable. All the different payables show up as your current liabilities. Those are your accrued liabilities that you're dealing with. Then under long term, you can see that they've got things that are called compensated absences less the current portion, so that'd be your sick time and so forth. Asset retirement obligations, again, we're not going to get into the specifics about what that is, but it is a long-term liability. Now we hit something that we recognize, revenue bonds payable. Okay, that's like bonds payable for a company. It's the non-current portion. And any capital leases, the non-current portion of capital leases. A big one for governments is the net pension liability. Look at how much that is relative to the other long-term assets. Look at long-term liabilities and look at it to the total of all liabilities. Total of all liabilities, you're looking at $42,100,840, and of that amount, $30 million of it is made up of the net pension obligation and the net OPEB obligation. And again, OPEB stands for other post-employment benefits. Okay, so that is a huge number that gets put on the statement of net position at the government-wide level. And I remember going to a meeting of the Association of Governmental Accountants, and I was listening to people speak, and at the time when they were kind of being pushed to start reporting this on the books, there was a lot of pushback from governments because of the amount of the impact it was going to have on their financial statements. And then you've got deferred inflows, which behave a lot like liabilities, but they're not liabilities. So that's why we report them separately. This is government-wide, so we don't see fund. What we see is net position. And so here we see our net investment in capital assets. And again, that's all the assets that we have, okay, minus the related debt, okay? And then we have our restrictions. So we have restrictions, and this is kind of by activity or area. So we've got some debt service, capital projects, public safety, development, public works, culture, recreation, and so on and so forth. So this is our net position. It's like the equity, but it isn't equity because we don't have shareholders. This is just what's left and how what's left is allocated. What is it allocated to? It's like speaking up for something. Okay, you get there. I don't know about your household, but when we barbecue something, everybody would kind of lay claim to what was on the grill, and so everything that was on the grill would be spoken for, or most everything. Anything that wasn't spoken for would be unrestricted. So, you know, that piece of chicken is mine, so it would be restricted for Carl, you know. Another one might have been restricted for my brother Doug, you know, and so on and so forth. And there may be nobody wanted the wings, and so the wings would be unrestricted. Nobody laid claim to those. So think of net position that way, is somebody has a claim on it internally, and so they have to set it aside. So it's restricted versus unrestricted in net position at the government-wide level. And again, these are the full accrual statements that we're dealing with. We can jump over here to the statement of activities. Now, this is a big difference. This is very different than the income statement you're used to seeing, and that's because we report by function or program. So you don't see it organized the same way. And then look, you see your expenses are all lumped together. So they're lumped together and reported by either function or program. And so like for the general government, we report expenses of $2.9 million. Okay? Then from expenses, we then take a look at the different types of revenues that we have. So we've got charges for services and sales, operating grants, contributions and transfers, capital grants and contributions. And so those would be subtracted from expenses to come up with kind of a net amount. Okay? Again, over here, we have a component unit. We're going to ignore that for the time being. So we have this net amount here, and look at the net amount. The net amount shows that there were more expenses than there were revenues. Okay, so then how do we make that up? Well, that's where you come down here. When you get into a position where, okay, what is our position here? If it's negative, we'll come down here and look. We have business type activities. Remember, these are our primary governmental activities. Down here, we have our business type activities. And the business type activities kind of offset that. It's in a different direction. Here, our revenues exceed our expenses. And so we have a positive number here. So overall, for the total primary government, we have a positive amount. And then we have other more general revenues. So why are they general revenues versus by program or function? It's because they can't be tied back to a specific program or function. And so again, what you see is you see them by what they are. So property taxes levied for general purposes, selective taxes, that just means it's various taxes that are paid that aren't necessarily tied back to a specific program or function. Hotel motel taxes, investment earnings, which is, you know, they invest money for long-term use, and those are the earnings that they get on it. And then unrestricted donations that they receive, and just miscellaneous, anything else that goes in. And then, of course, they deal with transfers. Okay, and so here again, you have your change in net position. That ties back to the net position that's reported on the statement of net position. And so we have our net position at the end of the year here should tie back to the total net position here, and it does. Okay, So, but again, the difference here is rather than seeing the income statement set up where you've got sales minus cost of goods sold equals gross profit minus the different operating expenses and so on and so forth. You don't see that here in this statement, and that's because the focus here is on accountability at the function or program level. Okay. There are other reports you can look at to get more into the details of what these expenses are. Okay. Now we can go to the fund financial statements. So what kind of language do we see there? This is the balance sheet for the governmental funds. So we've learned something about those governmental funds. And so we see that, again, total assets, this is only the current assets because there are no non-current assets in this particular fund statement. And so we've got cash and equivalents, investments, and then various receivables, inventory, and prepaid items. Those are the same things we're used to seeing when we're dealing with our private sector cohorts. For liabilities, we see our accounts payable and accrued other liabilities, our unearned revenue, and an interfund payable. So that's some activity that occurred between funds. And then again, we see our deferred inflows of resources, and this is your unavailable property taxes. And then you've got your fund balance set up. Okay, and we won't go into a whole lot of detail because I previously talked about this. But again, you've got your non-spendables, your inventory and prepaid, your restricted and the various restrictions, and then the unrestricted. So in terms of the accounts, it's not much different. When cash is received, you debit the cash account and credit whatever else it was received for. If it was received for receivables, so for property taxes receivable, that's what you're going to book it to. There's no big mystery around how the journal entries are structured. It's just a matter of you've got to get used to there's some different types of transactions in government that end up having different names associated with them. You just have to kind of get used to what those names are. And again, in a 4.5-week course, I don't expect that you're going to master all of this. There's a lot here. I want to take a look at one other thing here. The statement of revenues, expenditures, and changes in fund balance. And again, the revenues, we can see the different sources. So this is kind of a simple income statement, right? Because the multi-step income statements we're used to, here they take all the revenues and add them together and come up with total revenues. Here they take all the expenditures, add them up together, and come up with total expenditures. And then there's this other financing sources and other financing uses that we talked about. And then you have the net change in fund balance. Okay, that's going to tie back to the balance sheet. And so, again, here, the focus is on program or activity, not on the particular type of expenditure. Is that detail available? Sure it is. You can take a look at it and see salaries and benefits and supplies and rent and all of the things that you would typically see as expenses or expenditures. They'll show up somewhere, just not here. Okay, they're in the accounting system. It's just not the focus of these statements. All right, trying to think if there's anything else I want to talk to here. Again, when we're dealing with the budgets, you're dealing with. Let me bring up my PowerPoint slide again. When you're dealing with the budgets, again, you're going to be booking estimated revenues. You're going to be booking appropriations. And again, estimated revenues will go in as debits. Appropriations will go in as credits because they have to be opposite of what they represent with actuals. So estimated revenues are tied to revenues. Revenues are credits. Estimated revenues have to be debits. Appropriations are credits because the expenses or expenditures are going to be debits. Okay, so and so the budgetary accounts, that's a big place where we see some confusion. And again, when you settle up, remember I told you there's appropriation first, And then we have encumbrance. So you record the encumbrance and the entry for that. You would record the encumbrance. So you would debit the encumbrance and credit encumbrance as outstanding. And then you would reverse that entry when you had an invoice that would actually come in. And at that point, you would book the expenditure and the liability. And again, don't get the terminology confused. Expense and expenditure, two different things. Expense applies to the government-wide statements, it's full accrual, and it applies to the funds that are not governmental in nature. And so it is the proprietary funds, which is your internal service fund and your enterprise funds, and then to the fiduciary funds. Okay, that would be discussion of revenues and expenses. When we're over in the world of the governmental funds, we're talking about revenues and expenditures. Okay, again, expenditures have a more current focus on them. I always like to use the example of the purchase of a piece of equipment or a building or something that's going to be depreciated over time, because it's going to show up differently in the fund as opposed to what it's going to show up in the government-wide statements. All right. So again, the terminology, it just takes a lot of studying to get used to it. It's whatever you learned in private accounting, in intermediate accounting 1 and 2. There's a lot of similarities. We're just adding to it. There's some new wrinkles that we have to get used to. And so that's what the new wrinkles are. If I was to show you some semesters, what I'll actually do is show folks the chart of accounts for the state of Florida. And because I'm familiar with their websites and I know how they're organized, I can find that information fairly quickly. And I'll show them what a typical full account number looks like, and it blows people's minds because they're like, how do you remember all of that? Because it looks like a snake. It just has so many parts to it. But each of those parts means something, so that when you have the key, when you know your portion of it, you know exactly what they're talking about when they show you that string of numbers that gets recorded in the system. But the importance of that is it allows you to classify and report on that information using all of the pieces of that long number, because each segment means something different. And so if you're trying to report on a department within a division, you can do that by pulling out that portion of it and specifying that you want Department 10 in Division 40, or something along those lines. So I don't know if this has cleared up or clarified the issue with terminology and journal entries. Just know, again, that sometimes you're going to record things at a very general level. I know in your textbook that tends to be what they do. They leave out the discussion of what we call the subsidiary ledgers. They're not breaking everything down. In your own textbook, if you go to Chapter 3, and I think it's page 55, there's illustration 3-1. It goes over the account structure of governmental funds, and it kind of speaks to the same thing that I've been talking about here. Also, if you look at the example statements that they have, the illustrated statements that are in the chapters as well. I'm trying to find those real quick. I think they may be in Chapter 2. Yes, they're at the end of Chapter 2. It's for the city of Salem. And you can look, and just like with the city of Dalton that we just looked at, you can see the government-wide statements, the statement of net position, and the statement of activities. You can see that similar account structure that you typically see with a private business. And then when you get into the fund, all of a sudden we shift over and we're looking at activities and programs, as opposed to necessarily breaking down the expenditures into what they actually are, or the expenses into what they actually are. We're not breaking it down into salary, benefits, supplies, inventory, all that stuff. We're not breaking that down. We're just reporting it in total by program or activity. Again, there are places where you can find that detail. It's just that's not the focus of the financial statements when we're dealing with government. The issue is accountability, and that accountability typically centers around, did you do the things that you said you were going to do, that you actually voted on and accepted that you were going to do by law? And so that's what the financial statements tend to be about. So again, this is kind of a long 30-minute video to kind of go over this, but it is an important question. It is an important topic. So again, I'm sorry. This is kind of rushed in putting this together. I'll have to refine this presentation and add more detail to it at some point, but just so that you have something to be able to refer to. So thanks very much, and let me know if you have any more questions. You can always email me.